Marcy, let me ask you about some of the sort of moral questions. We were talking with Lady Lynn about this earlier, and it's a big issue. You know, there are companies that are going to struggle, be challenged at certain times. They're going to have to lay off employees, make hard decisions, whether it's cutting dividends or other things that may not be in the interest in that moment in a zero-sum game. It could be against the interests of the employee, if you will. Maybe it's in the long-term interests of the company, potentially, but to that employee, it was not in their interests. And the question is how that gets balanced and how the Vatican thinks about that, because, you know, the Pope has been quite outspoken about his view about capitalism for a long time now.
Mm-hmm. Yeah, you know, I think he has been as well, and he's also, you know, been quite vocal around poverty, you know, around the world, you know, and certainly it's not CalPERS' role to solve poverty, but being a retirement plan, we do offer benefits that ensure that there's some kind of financial security. So you know, I think companies are having to balance this need of keeping, you know, an appropriate balance sheet while also balancing the needs of their employees. I don't believe that this will be a long-term trend. I believe that companies, you know, you're hearing news today about the availability of the vaccine. The markets have been, you know, pretty confident. The markets have certainly been shored up. We're watching for what happens when the markets are no longer shored up, and whether there will be an appropriate, timely, and patient exit. That's certainly, you know, as a long-term investor, something we're watching for. But I think companies have to make really important trade-offs right now, and we're a long-term investor, and we'll be watching for those trends. But we do understand companies have to make, you know, decisions that are not very popular with their employees in order to remain sustainable over the long term.
Marcy, speak to how you're thinking about the markets right now. Do you look at this, you say, fairly valued? I mean, there's a lot of people who are obviously looking 12 months out, and there's a lot of finger crossing going on right now. A lot of things have to go right for quote unquote fair value where it is today to make sense.
Agreed. Yeah, I think that, as I mentioned earlier, we're watching for when the markets actually more align with the actual real economy. And whether that's a year out, I think the Feds have been pretty clear that they're going to keep interest rates low for at least the near term. And, you know, when we look at market opportunities, we're looking at, you know, growth versus value, and, you know, defining value differently potentially for those companies and how our portfolio is situated. We're looking at emerging markets beyond public equity. We're looking at, you know, private equity. We're looking at debt, potentially debt instruments. But, you know, we have to think, again, very long term, past the 1 year, past the 3 year. We have a 7% return challenge that we have to hit. We've got a gap of about 300 bips that we have to make up in performance. And that's really been the focus of the team.
Shepard Smith here. Thanks for watching CNBC on YouTube.